Okay, good evening, ladies and gentlemen, again, and this is Clueless 8. We're going to cover the S&P 500 here. Same format, same parameters. So here's the daily chart of the S&P 500. Here's the blue uptrend line. Seen this a few times now, and this is what's going on. Okay, the S&P 500 pretty much had a bearish engulfing bar, this red, today. And after a pretty strong move from Friday, and then follow through on Monday, looked fantastic, and this is today. Just shows the extremely volatile, almost schizophrenic nature of the market, good and bad. And as you can clearly see, we're making money in this terrible market. So that's just what traders do. One has to be flexible and trade accordingly. So anyway, so what we did see here, that which was a somewhat of a candlestick reversal, was we hit the 50-day, follow the arrow, 34-day, and we bounced. Okay, and this was more pronounced on the TOS chart, which I showed intraday for real-time members, where I had drawn the channel, and it bounced off exactly past the channel. And if you can look at this here, it didn't even bother coming down to this level. Let me see here. So here, make a long story short, here is what I see. I find this pattern, if it holds here and then attempts a sharp bounce, takes out this Bollinger, this faint red line, and then hits acceleration band, that's 1915. Okay, bearish scenario or pullback scenario is that this is a head, left shoulder, failure at right shoulder. Here we come down, we go below the 22 at 1858, which I thought we were going to hit today, and then we break through this accelerated uptrend line at 1854, and then we come down and we go through the lower Bollinger, and we come down to 1829. So that's about 50 S&P points. That's about 300 Dow points, roughly, approximately. Okay, so a lot of money to be made on the short side if that happens. My gut tells me that they're going to hold the market up this week, and they're going to let it go probably maybe next week, like 1 or 2 days, and then they ramp it up towards the end of the week as the books close for the month. We'll see. So here we are starting to see a negative divergence here. Let me make it big. This is the negative divergence. Clearly see that. Okay, we are look at it here. When it hit here, we were here. We're higher than that, but look what's happening on the underlying histograms coming down. This is definitively a negative divergence. So I believe it resolves itself by coming down and testing the 1830, and then breaking through and possibly hitting the 200-day moving average at around 1788. Below that, we still have our markers. As I mentioned to you, is the 1740 level right here. Okay, so we'll see what happens. That's S&P 500 for you, so at least you have an idea. Of course, for real-time members, and I try to help as much as possible on the basic side too by posting some intraday charts. I'll keep you abreast as much as possible as we navigate this wild market and still manage to make money. Just be flexible, keep your trades smaller in size, and when you have nice profits, don't hesitate to bank and take some off the table. Okay, so that's it. Let's move on to the Russell 2000. The Russell 2000 is a big mess, and yet in between that we still made money on this baby from last Friday. Okay, so let's look at the daily chart here. On the daily chart, this is what the Russell looks like. Let me draw the uptrend line from November 2012, and this is what we see. Okay, just keep in mind that the reason I focus on these indices is not just for an educational academic purpose. These things tell us which way general market directions are, so we can capitalize on the leading stocks within these indices to make money off them. And it's really as simple as that. So, and it gives you a broader understanding on the markets. So, let's see here. Here we have the Russell 2000, very choppy. Okay, very choppy. We have a reversal candle on Friday. I'm sorry, that was Thursday. This one. And as you can clearly see, this is sort of the downward sloping channel. It's zigzagging in between. This is the one I drew. So, and then we followed through on Friday, and then that was Monday, and this is Tuesday. The Russell 2000 also. I did short around here, made some money, as you all know, and people who followed, and it did a reversal candle, interestingly. Okay, and that was off the same level as it was on what day was this? This was somewhere around 11. Okay, so right here, I was expecting it to come down to 1088. It never did. It hit 1092, yeah, and just hit there. So, let's look at two different scenarios like we always do in life, bullish and bearish. So the bullish scenario is that it moves up from here, goes over the black line, which is the 200-day moving average at 1117, and attempts to cross over the 34 and hits the top of the channel again, which is 1138. So that's about 41 Russell points, or 42 Russell points. Lots of money to be made. Okay, let's look at the downside scenario. Russell puts or IWM puts. So we are going to basically come down here, which is 1076. That's roughly 20 Russell points, RUT points. Okay, that's also very decent. So that's the downside scenario. We come back and test this low at 1080, and if we break 1080, then all hell breaks loose, and I believe we will come down towards this level here at we'll probably come down here because we had some very large reversal candle here, if you notice, back in November 2013. So we're looking at about 1078. Looks like pretty strong support here on the Russell. Okay, otherwise we come down, fill the small gap here at 1052. Now here's the interesting part, and I still, nothing has really changed. This positive divergence that's been sitting here is continuing to sit there. We still had a green histogram. Unbelievable, even after the pullback. Look at this. Okay, I'm just drawing this line to show the positive histogram, it goes up. So right here is still a green histogram. Incredible. So something is going on here. Maybe it's too oversold for it to come down too hard, too fast right now. Russell's almost down 10%. And I don't know. So if we do bounce from here, thanks to Janet Yellen and whatever forces that may be, maybe the Euro, the ECB bailout program and their version of QE that's coming in June, all this type of governmental intervention, central bank intervention that comes in, policy stuff, could very well move it up. And like I said, we could come down here and then bounce hard and test the uptrend line, retest the uptrend line at 1160, which would be phenomenal for bulls. And it would also coincide with the 1160 for the 50-day moving average. So that's the Russell 2000 for you. So shorter term charts look bad, but look at the daily chart. It actually doesn't look that bad, unless we fall apart and break through here, in which case, like I said, I showed you the downside targets. We got 11, you got 1052, 40 points from there. It's a lot of money on the short side. Okay, so we're good with the Russell. Let's look at we'll quickly look at the IWM. Same story here. That's the one I played, and one of the things I played. IWM also reversed itself from the Bollinger, the acceleration band here. This is the Bollinger. We're just going to change the color of the Bollinger so we can see it. Okay, perfect. So yeah, it came down to the lower Bollinger and bounced. So I made some money on that, and not too bad. What was it, like 28% or something like that? And on those puts, but it didn't melt down anymore. I was hoping it would melt down a little bit more, but never did. Again, we got this positive divergence going on here, even though on balance volume is really dragging its feet on the ground. But the last time it was here, look what happened. All right. So let's move on. So that's where we are with IWM and the Russell 2000. Looks very ugly, but in between that ugliness, this can also be looked on as a consolidation flag, which is in a process of bottoming. Okay, so we have yet to see how this resolves itself. We can come down to 104. I did mention that. Okay, it's still there on the table. Or we can basically bounce from here. Let's look at the SPY. A lot of people look at this. Okay, the SPY. Let me make this quick. Okay. So this is what's going on the spiders here. There. Okay, bounced off the 50 and 34, very powerful supports. Either we bounce up here towards the 1900s, 190, and then 191, 191 and a half, or we break down below this line at 185, 184, come down and test this. There should be some level of support here on this uptrend line from November of 2012. So we're looking at can keep this chart and you can monitor it, and see where it is during the day. 183, and then we have this white line here, which is the 200-day moving average. Okay, right here, and that's at 178. Okay, so without getting too numberish here, that's the picture of the SPY. All right, we're gonna now cover a few stocks.